So as it pertains to Rhino Wealth and the markets, I kind of feel like this I don't know why I always qualify all of our lives with like trying to guess how long it's going to be. I think it's because I don't stop talking. I think this live will probably be on the shorter side. So where are we and what do we see? So as of last week, we were sharing our view that we believe we're going to see a slingshot tire. And the rationale was, again, like we always say, the circus being in town. Now, there's different types of circuses, right? Like when you were a child and your mother or father yelled at you and said, oh my God, you're acting like a circus. This house is like a circus. Well, the circus was in the house, but is there a difference between that circus and Barnum and Bailey, right? Like there's a difference. One circus is larger than the other. The point being, when we had always shared that the circus was in town, it was talking about the Federal Reserve, it was talking about the government. If the government is going to print a bunch of money and the Federal Reserve is going to print a bunch of money, and again, that's overly simplified, right? The government issues bonds, they go ahead and pay the bond. The Federal Reserve prints the money to buy the bonds. So that's how that works. And the money's printed out of thin air. Anyway, for all intents and purposes, the government and the Federal Reserve was printing money, right? Like that's okay. That meant the circus was in town. There's all this money and the goods and services. So when you have an increase in supply, right? Well, actually, that would be an increase in increase in supply of money, but a consistent level of goods and services. So actually, I got that backwards. The demand is higher, right? There's more money, there's more demand, and the goods and services all stay the same. Then more money goes to the goods and services. Therefore, each one goes up. I'm looking for appropriately. So if there's $10 and there's one banana, maybe the banana's $10, right? But if there's $10 and there's two bananas, now each one's worth $5, right? An increase in money supply versus goods and services means that the money's going to find the goods and services, therefore each goods and service goes up in value, hence inflation. That's what we're seeing right now. So when the Federal Reserve goes ahead and says, hey, listen, not only are we going to stop printing money, but we're going to take money out of the system. When the government says, well, we can't do any more bailouts because it's politically it's not good politics to continually print you money when you have inflation, right? Like you printed all the money you could, because take a look at the inflation we have today. So one would say, all right, well, that sounds like the circus is leaving town, right? You're taking money out of the system. You're done with the bailouts. You're done printing the money. So now there's a decrease in money supply in the system. And therefore all the goods and services go down in value because there's less money to go to them. That makes sense. Okay. But Anthony, you're saying there's another circus in town? There's a bigger circus in town? Yeah. Because the bigger circus, so when you talk about the circus in town in terms of the United States, well, the United States is, I can't think of any words today. The United States is constrained to the United States. There's nothing outside of the United States that matters to the United States, right? So for instance, if Spain is doing rates up, rates down, whatever, that one thing doesn't matter to the United States because Spain is not larger than the United States. There is no single country that's larger than the United States in terms of economy. China will likely surpass us by 2030, but they're not there yet. Now, of course, China is large enough that they move the needle, right? If China says, hey, listen, everything we do from now on, we're going to send it to the US, that moves the needle. But if Spain said that, it really wouldn't matter, right? Because Spain is so much smaller than the United States economy. Okay. So the circus in town referring to the United States is referring to the Federal Reserve. It refers to the government. Okay, but there's a bigger circus in town. So how does that actually work? Well, the entire rest of the world's economies are structurally in decline. Whether it's due to inflation, whether it's due to economics, whether it's due to geopolitics, whether it's due to regular politics, the structural economies of the rest of the world are crumbling. For instance, if you had $1 billion, would you send it to Europe for safekeeping? I don't think you would. Not only do you have Russia invading Europe, which seems like it's going to go for quite some time because Russia and China, and it looks like east versus west. But more so than that, the euro was built flawed. And it's not that Anthony's coming out and saying this, therefore it's correct. if you go ahead and take a look at how the euro was built out and created, it was in a two-pronged approach, but they never did the second prong. The first prong was to consolidate all of the rates in the economy, that one body could make monetary decisions for the entire region, the continent. But the one thing that they never got to doing was consolidating the debt. For instance, if Germany's doing really well and Spain's doing really poorly, how do you make the same rate decision? You can't without hurting one at the behest of helping the other. And does that mean you help the other as much as you can? No, because that means you hurt the other one as much as you can, which means you always go halfway on your policy, which means if you go halfway on your policy, it doesn't help anyone, it just kind of pisses everyone off. That's how the euro's been built out, which means in good times, great, in bad times, horrible. Therefore, the disintegration of the euro is kind of a big thing. No one's talking about it, but when you take a look at the bond yield, you see the bond yield of Germany at negative, but you see the bond yield of Spain like positive. And you ask yourself, well, if they have the same monetary body, why aren't the bond yields the same? Because Germany's a good economy. Germany makes stuff, right? Like they're, well, good economy. Spain is a bad economy. Therefore, if you go ahead and foresee the disintegration of the euro, where do you want your currency? In Spain or in Germany? Well, you'd want it in Germany. Therefore, you would buy German bonds now and you would pay the premium to buy German bonds than to buy Spain bonds and pay the discount, right? So if I say to you right now, I'll give you a German bond that's -1%, but I'll give you a Spain bond that's +1%. You would say, well, Anthony, I'll take the Spain bond all day. I want to go ahead and receive money. But not if you're thinking, well, there's a disintegration in the euro and the money comes apart. Do you want to own currency in Spain or own currency in Germany? Whoa, 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 I'd rather own currency in Germany. Well, the bond is 10 years. I'll take the German one, right? And that's what's already priced into the bond. So if you take a look at the bond market in Europe, you'll see that each country has different yields, although they have the same monetary body. So you have to think why, and that's the reason. Then you have the countries that are right next to Russia, where Russia's coming in. Do you want to put your money in Ukraine? Do you want to put your money in, what other countries over there, like Finland or something? I don't think so. Do you want to put your money in Russia? I don't think so. Do you want to put your money in China, a communist country? I don't think so. Do you want to put your money in Antarctica? What, in like igloos, right? Yeah, no, Alaska's US, Antarctica's its own. Do you want to put your money in Africa? Do you want to put your money in South America? Do you want to put your money in Central America? Do you want to put your money in Australia? Where do you want to put your money? You have $1 billion, where are you going to put it to keep it safe? Oh, that circus. This, because you also got to remember something. The third world countries, the emerging markets, after 2008, they were unable to issue any debt. Who was going to buy debt from Argentina? Like Argentina has a 40% inflation rate. Would you buy debt in Argentina? Would you say, hey, Argentina, I'm going to lend you $1 million and you could pay me back 1 million of your shekels down the road and they'll be worth as much to maybe buy a stick of bubble gum? No, you wouldn't. What if Argentina said, listen, we'll pay you back in dollars though? Whoa, that's a different story. If you're going to pay me back in dollars, that's something I could go ahead and receive back because I know the inflation rate of America. I know America is not a government that's going to allow 40% inflation. Okay. Well, what was the bond yields? What was the Federal Reserve rates in the US during this period of time? 0. So what did it take Argentina to go ahead and borrow from the Federal Reserve? Well, not 0, but not like a very high percent, right? Like they were able to do it for, I don't know, 1%, 2%, 3%. So they were able to borrow money so cheaply. And it's not because Argentina has a country, it's a sovereign country. They're able to go ahead and guarantee it because they're like, hey, listen, we have all these citizens. If we need to raise taxes, don't worry. We'll do what we need to do to make sure you get your money. Okay, cool. So Argentina and all these Central America, South America, emerging markets, India, like all these places went ahead and borrowed money from the US. And they paid the borrowing rate of 0, 1, 2, 3, 4%, something very low. Okay. So they were able to go ahead and issue their own debt because they were backing it with the debt that they borrowed from the US. Yeah. You know, buy our bonds. We have all this American money and we're going to back it with that. So no problem. You're good. So what happened? People started borrowing from these countries. You're going to back it in dollars. So now Argentina was getting a bunch of people to borrow. Yeah, borrow. Argentina was becoming flushed with cash. What were they doing with that cash? Who the hell? Who knows, right? I haven't seen like a new big building. I haven't seen a skyscraper in Argentina built. But to go ahead and keep lending all that money, they had to go borrow from the US. Okay, all seems good, right? No problem. Well, what happens when the US starts raising rates? Oh, well, when US starts raising rates because of the inflation, what happens to the value of the currency? You're defending the currency, you're raising the rates, you're not giving that much out, you're taking money out of the system. Okay, so the dollar goes up. Okay, cool. What's the dollar? What's currency? It's all relative. If my currency goes up, yours goes down. How much of mine buys how much of yours? It's relative. It's not in a vacuum. $2 buys how many euros, buys how many rupees, buys how many rubles, whatever. Meaning, if the US dollar goes up, then what happens to those emerging market currencies? They go down. Okay. Well, since when they were borrowing all that money, they didn't exactly build a skyscraper because they didn't exactly do anything that brought in money. They thought they could just do that forever because that's what governments do. They go ahead and borrow and borrow and borrow. And then if you don't like it, you just vote them out. But while they're doing it, they're enriching their lives and they're living their best life. And what do you think? They don't have golden parachutes? They say F you on their way out. That's the way it works. So during all this time, all this debt, and now the new guy that comes in, because the people voted that guy out because God forbid people have like a free press anywhere that could say, listen, what's going on? Because then the president of that country is like, hey, that press guy cut his head off. We don't need him telling people. Okay. So now the new guy comes in and says, oh my God, guys, the last guy put us in this bad situation, but this is what we're going to do to bring it back together. We're going to do it together. We're going to bring it back together. When reality is that guy probably made $1 billion along the way. Anyways, what happens? Well, to pay back the debt that they owe to anyone, right? Especially to the US, they have to buy back US dollars. Because you think that they borrowed the US dollars and kept them? No, they had to pay the people that borrowed money, that lent them money. They had to pay that back. So those dollars don't exist anymore. So to pay the US back the money that it borrowed from the US, they have to do it in dollars. Okay, fine. So where are we going with this, Sam? Well, if Argentina's currency is going down and the US currency is going up, then how are they going to pay that debt back? Well, say they borrowed $100. Okay, we borrowed $100. Our Argentinian peso, $100 of it will buy whatever we borrowed in US, right? Okay. Well, now our peso went down. Now the dollar went up. Now it takes 140 of our pesos to buy back from the US. Now it takes 200 of our pesos to buy back. What effectively is happening? We're doubling and tripling the debt that we owe because of currency. The money we owe, we could never pay back anyway, but now it's doubling and tripling. We could definitely not pay that back because what did we do with the money that's going to allow us to pay it back? What's around us? We didn't buy us, guys. We didn't create anything. We're built on tourism. We're built on exports. Well, if you're in the third world, emerging markets, what are you exporting? Like cocoa, bananas? Like, what are you exporting? Tourism? And I'm sorry if that sounds very callous, and I'm actually not being offensive. Emerging markets don't exactly export something that is crucial to the world. A lot of the times they're in really, really nice locations. They don't have a big formal government or things like that, which is the value proposition to go ahead and inspire tourism. But if regular markets like first world markets are crumbling because rates are going up and inflation is up, then those people don't exactly have the money to go ahead and participate in tourism, which means the countries that go ahead and export things like tourism and inflation victims like bananas and cocoa and oranges, they're not exactly receiving the money. So not only is my debt tripling, my income's crashing. How do I ever pay that money back? I can't. Meaning no one in their right mind would ever send money to those countries. But here's the problem. How infested is the financial system with those countries? How many people lend them money that are never going to get paid back? And if you lend money to a AAA or BBB borrower like a country, well, then you could leverage it how many times over? Maybe you lent them money 10 times over with the same amount of money. It then builds into this big thing. And I've always said, and not that you would know this, but some people would, since 2008, when the government bailed out the financial system using bonds, I always said the next crash was going to be the biggest one because who bails out the bond market, right? Like when you had tech crash in 2000, 2001, whatever, They got bailed out by the housing market. Oh, tech crash, but we're going to lower rates to zero, and the Twin Towers went down, and we're going to show the world that we are resilient. Everyone go buy a car, buy a house. We're going to lower rates. We're going to guarantee this. Cool. Everyone did that. The nation came back. So stock loss then went over into mortgages, financials, right? That loss went over into the bond market. Think about the Titanic. Who bails out the bond market of the largest country in the entire world? You can't. Therefore, every country before us has to crumble before it gets to us, because the biggest and baddest person on the block isn't going to be the first one to go down, even if it is their fault. Everyone else goes down first because they cannot go ahead and they can't defend themselves like the US can. Therefore, there is not a single country in the entire world, any reasonable adult that has any sense of economics would ever send $1 billion to except America. Now, when you go ahead and send America money, why do you do that? Well, we have a president that goes to election every 4 years. We have a Congress and a Senate that refreshes every 2 years. You got the rule of law. Each state has its own check and balance. So as bad as we think things are, right? Like Roe versus Wade, this, that, blah, 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 blah. We could still have that debate. That's in America. We could still talk about it. We go on social media. We could yell about it. You could have people in Wisconsin all dressed up in pink raiding a federal building during a sanctioned vote and not be called insurrectionists, but people in January 6th are insurrectionists, right? Like you can have a country where all this stuff happens, but we still live a good life. We still wake up every day. We still go do our job. Because we're the best in the world in terms of freedoms and things like that, like freedom, rule of law, blah, blah, blah. So when all of this money is coming into the US, that's our definition of the big circuses in town. The 1929 circuses in town. Now, what happened after that? You had the Great Depression. Like things are going to get really bad 4, 5, 6 years from now, but not today. Not today. In fact, this next year, 2 years, we're going to have more money come into this nation than anyone's ever seen before. So where does the money go? Like, where's it go? Well, that's the question, right? Like, that's what we're asking ourselves. So you see that real estate values are still really high. Do you ever ask yourself, why are real estate values so high? Like, who can afford to buy a house? Why are those mortgage standards so high? Who qualifies for this? Well, it's not for you, silly. All of those countries and all of those investors around the world that have billions of dollars that need to park in the US, they have flawless credit. They're buying in cash. They're able to come to the US and outbid you any day of the week. So those house values stay high. Well, you don't know anyone that's really able to afford or buy a house. In fact, rental in the US is the highest it's ever been. People still living at home with their parents is still the highest it's ever been, but home prices are still going. How does that even make sense? Stock market. Any one of us can sit here and say, well, the stock market is just cuckoo for Cocoa Puffs. Like, how in what world? Like, everyone I know is not doing so well. In fact, only the rich are doing well, but everyone else is doing quite poorly. How are companies still beating earnings every day of the week? In fact, even when they don't beat earnings, well, money's coming into the country. So even right now, you saw a stock market that's valued quite high, right? And everyone's waiting for that big, big crash. In fact, I submit to you that we probably already seen it, right? Like the market went down 15, the NASDAQ went down, I think, 20%. And everyone's saying, oh, it's going to be bigger. It's going to be this deflationary holocaust, blah, blah, blah. Really, really bad. But what they're missing is the money from overseas that's still coming into this country. This country, every time a stock goes down, yeah, it's getting beat up. It's going, it's going, it's going. It's only because the hedge funds and all the high frequency trading that got into them knowing the macro field, knowing what's in front of them, knowing that all these countries are going to pour money in. Therefore, they over leverage themselves. And that is not conducive to trading. When you over leverage yourself in trading, things cascade down quite quickly. My wife and I will always tell you, stocks take the stairs up and the elevator down. But when they're done, when the elevator has crash landed and everyone is blown out, then what happens? Is it still going lower? No, the money from other countries come in. So we've always believed you're going to see a slingshot higher because the pessimism in this market, the consumer sentiment is probably the lowest it's ever been. In fact, it's lower than it was in 2008 during the financial crisis. And that's a real statistic. But the unemployment is what, like 3%, 4%? Nobody says they see unemployment moving up any significant amount because there's a shortage of labor because there's so much money coming into this country. So it's a really dichotomy. It's those that have, which are few, and those that have not, which are many. But those that have not are being kept alive by being employed, which is by their employment allowing the country to continue without rates and all this other stuff everywhere. But the inflation is making that quite difficult. So what do we have? Well, we believe a slingshot's higher. We believe that when this, market pullback is completed and people become a little bit more optimistic and a little bit more constructive, which by definition is when after you have enough selling and people see it start moving up, they're like, okay, and they start seeing it and okay, then they start seeing it more and then it goes up and then it just flies. That's what we believe is about to happen. We've said that last week. We saw a 500-point up day. Friday, we saw another 800-point up day. Last night, we saw the futures down 130, but then this morning, the futures were up 130. Last time I looked at the stock market, it was down 100, but then it was down 66, and I have no idea where it is now. But let's talk about what this week is. So this week is the last week of the month, which is the last month of the quarter, which is the second quarter, which is the last quarter of the first half of the year, which is really quite important. Why? Because the large amount of money in this nation or in this market is managed by hedge funds, pension funds, retirement funds, things like that. Now, those are, well, not hedge funds, but pension funds and retirement funds are considered very safe money. Vanguard and mutual funds, it's all very safe money. And the reason it's so safe is because it's always very well diversified. There's no particular segment that's super high versus something else. So what I mean by that is, say you have a portfolio of $100 and 10% is in tech, 10% is in energy, 10% is this, 20% of it's in stocks, 20% of it's in bonds, like really, really well diversified. Well, the way that stays well diversified is it's reconfigured at the end of every week, quarter, month, semi-annually. And the larger time frame that passes, like semi-annually, the bigger the reconfiguration, because it has to account for the previous 6 months. So what has happened over the previous 6 months, and what can we go ahead and believe, or at least forecast, that will happen this week in the market? Well, we've seen stocks down 20%. We've seen bonds down, like, I think 20%, at least close to it, right? Of the stocks that are down, energy is the second best performer. I think after last week, they might be down, but they're at least break even, right? Energy stocks have done well this year, but the stocks that have done the best is the commodity stocks. What stocks have done the worst? The NASDAQ, okay? What asset class has done the best this year? Well, we said it before. Currency, the dollar. Anyone that's holding money in cash has made the most money this year. Therefore, these hedge funds and pension funds and retirement funds always have a certain amount of cash on hand. Say it's 10% of the portfolios in cash. Okay. So if the 10% of the portfolio that's in cash goes up 20%, which I don't know what the dollar is, but it's probably up 10%, something like that. 10%. Okay, so the 10% of the portfolio that's in cash goes up 10%, now that's 11%. The 90% of the portfolio that's in stocks and bonds goes down 20%. Well, that's presumably what? Like 75%. Well, let's, and I don't have the calculations in front of me, but what you could very quickly realize is that the value in cash far exceeds the 10% mandate of that portfolio, because the stocks and bonds went down and the cash went up. So how do you go ahead and guarantee that that portfolio starting the second half of the year is back balanced, 10% cash, whatever in bonds and real estate and stock? Well, you sell the cash and buy the bonds and real estate and stock. Well, how do you sell cash? Well, you don't. It's in cash. It's right there. Well, how do you buy bonds, real estate, and stock? You take cash to do it. Where's cash? Cash is right there. So you're going to see quite the movement this week in funds that have to use that cash by mandate and go ahead and purchase the most beaten up sectors to rebalance the portfolio. That sounds like the precipice, or at least the ingredients for some type of slingshot higher. In fact, I think JP Morgan even came out and said that they believe that this week the stock market go up as high as 7%. Do you know 7%? 7% of, what's the Dow at? Like 30,000? 1% of 30,000 is what? 300? So 7% is 7 times 3. That's like 2,100 Dow points. That means a Dow they're looking at could get as high as 32,000 this week, assuming it's 30 now, which we'll take a look. Well, if I were to tell you the market can go up 2,000 points this week, what would you do? Now, that's not me telling it to you, but it's me saying, based on paper, we see the market going up at least 1,000 points this week. Well, you would say, gee, golly funky, I want to go ahead and buy stock. I want to buy something that's beaten down. I want to buy options. I want to be super, super leveraged to that. Well, before you get all excited, remember we could be wrong, right? Like it could go to zero. Anthony didn't just learn this today. Anthony knew this. And in fact, Anthony didn't even know it that long because Anthony kind of just learned it over the weekend because Anthony wasn't thinking of the calendar, which means people that are in that industry that do look at the calendar knew this beforehand, which means the 800-point rally Friday could have been part of this getting in front of it, which means if 800 points happened then, well, if only 2,000 could happen this week, now we're looking at 1,200, 1,300. Well, maybe the 500 that happened Wednesday was part of that, but how much did we lose Thursday? The point is, it could have been front run. We believe we'll still see a positive week. We still believe that 1,000 points this week, but we could easily be wrong. And we just illustrated points that maybe are bullet points of how we could be wrong, where we could be wrong at. So to go ahead and say, listen, damn everything, I'm going to throw a whole bunch of money into NASDAQ options is probably not a good idea. But it might be. But if it's a good idea, you took on a whole lot of risk for it to be a good idea. So that is to each their own decision, right? Because we don't make decisions for anyone. So what did we do last week? Well, we bought Micron. Now, Micron is the second premier chip maker, maybe third, right? You have NVIDIA, you have AMD, and you have Micron. Now, there's a shortage of chips across the globe because of supply chain, because of China and all the rest of it. Chips don't exist. So to go ahead and put chips in the self-driving cars and basically everything needs a chip. If you want to go mine Bitcoin, you need the chips, right? So the chips are the most important thing. In fact, even iPhone came out and said, listen, because of the supply chain, we can't produce as many phones because we don't have the chips. Now, the supply chain runs back to the companies as well, because it's like, well, they can't get the parts to make the chips, but if you're able to start getting the parts to make the chips, the demand's there. Therefore, a company that's a chip maker, the demand is already there. You just need to get the components. Well, at any corporation, I believe if you give them 6 months to a year to go figure it out, I kind of believe they'll probably figure it out. Now, the case that people are saying that might be the pessimistic case is, well, companies know this, so they double ordered in the beginning of the year. Therefore, the demand's not going to be there the way you think it's going to be. In which case, I say phooey. I just don't believe that's the case. Corporate America is not, I don't want to say they're not smart enough, but they're not incentivized to play the long game, right? So if I'm a company and I double order, that means I'm guaranteeing that I'm going to have the demand later, and I'm hurting earnings today to go ahead and take that risk. When the reality is everyone else is not doing it, so why am I going to hurt myself? If you're Apple, you do it because Apple's Apple. If you're one of those companies that you know the demand's going to be there, you do it. But if a company doesn't know the demand's there, they're not going to do it. Therefore, how many companies know the demand's there? I think the list is Apple, right? Like that's it. So now Micron reports Thursday. So with that behind us, where are they located? What sector? They're NASDAQ, the most beaten up sector. Everything about them has gotten slower. I think it was like $100 stock, $150 stock. It's now $50, right? Like, and they have earnings Thursday. Now, are we going to hold it for earnings? Absolutely not. But the earnings are after the bell Thursday. So if we believe that the NASDAQ, which is the most beaten up part, if we see a tidal wave of money that's going to come into the NASDAQ, and the chip makers are probably the most beaten up sector in the NASDAQ, and this one that we believe is a good company and a good sector and a good everything that's going to see the money that has earnings Thursday with an excitement around them, people are going to say, wait, that one, it's this, and they have earnings. Let's get in for the run up. So we bought it Friday. I believe we're up 47% on it, but we're going to hold this one. We believe we're going to hold it probably till Thursday morning. We believe we'll probably get 100, 200, maybe even 300% on it, which would be really cool. Now, when we go ahead and look at it, that could be down $7 bazillion. I have no clue, but I think it's still up. So let's take a look at the market and see where we are today. Let's see where, I think I have it over here. Okay. Oh, it is up. Thank God. I was really hoping it was. All right. So where's the market today? All right. So the market's down 50, NASDAQ's down 85, but you can see Micron's actually up 0.4, 0.5%, which is quite constructive because even when the market's down, it's up. Now, we believe the market's going to end up positive today, although the VIX being up isn't constructive, but is the VIX really up that much, right? Like I don't see it up that much. Now, look, we have prominent crypto hedge fund defaults on $670 million loan. Where's crypto? It's down a little bit, but it's not under 20,000. So everything looks like it's kind of in a bit of a holding pattern, but maybe I'm just seeing that because I'm looking for it, right? Oversold stocks, Ukraine updates, new gun laws, Russia slides into historic debt because they have a payment coming up. Etsy shares remain under pressure. Oil's up, travel's down. All right, so let's see where the market's at, right? So let's go take a look at the S&P and the spiders of the ETF for the S&P. Okay. Now, last week we said we were getting constructive on the markets, right? So, that worked out well. These are daily charts. All right, so let's see, right? Actually, let's clean this up a little bit. And then we're going to get going. Okay. So as you can see, we have a nice uptrend. Like that's very, very clear. It's going. Okay. Now, what do we see with volume? It's going down. So when the market's up and volume's down, that's not a good thing. Well, it's not that it's not a good, well, it's not a good thing, but it's because can you believe it, right? The volume is the line to take the test. Now, what you'll notice is this uptrend is longer than this line. And I did that on purpose because what you can see here, now obviously that line is longer, but you can see the volume went up, right? So look at this, a big up day and a volume spike. A volume spike on a big up day is so constructive. That is a very, very good thing. Well, actually, so it means one of two things. Either a lot of buyers are coming in or a lot of short covering is happening. If the short covering thing's happening, that's not a good thing. But nevertheless, it's good until it's not. Now let's take a look at volatility. So during this time frame, volatility was going down, right? Now, what happened here when that spike happened? Volatility still went down. So market up, volume up, volatility down. That's the golden triad. Like that's the best thing in the world. Now you would say, Anthony, but volatility is spiking up today. Well, yeah, the market's down a little bit, but the day's not over. We have no idea what's going to happen today. So that's the case now. But what happens if the day ends up positive with higher volume and volatility down? So what we said Friday was, if today ends up positive, we're ready to say slingshot on. Now let's take a look at Micron. And let's take a look at Micron on a weekly chart, right? Just to give you a little bit of perspective where it is. So the last time it got to levels that it got to last week was November 2020. And I don't know if you guys remember, but 2020 was a pretty terrible year. All right, so let's take a look at it on a daily. So this was as high as 100, right? Yeah, look at that. 98.39, it just missed 100 back on January of this year. And it's just gone down and down and down, right? So it got to a 13 red and green. Last time it got to a 12 red, no green. It went up, all right? So it's down, down, down. Now earnings are coming up. Do we believe that this could do kind of like one of these? Well, I think so. I think we kind of get 70 this week. I'm really hoping we get 70 this week. Now look at it, it's up 1%. So let's see. Let's take a look at a 5-minute chart of the day, see what's been going on. So as you can see, it started quite higher. Oh my God, almost 60 this morning. That would have been lovely. And it's come down. All right, so it's sold off. Everyone's like, all right, get me out. The market's going down. But look at this, it's catching itself. Now, these are 5-minute bars. We don't know where the day goes, but I can tell you that if the day ends up positive, then Micron's likely going to be a beneficiary because it's up almost 1% with the tape negative, with the day down. So we're constructive on it. So if we believe, which we do, that the market's going to be up this week, and we see a stock that's up when the market's down, then that tells us that's where we want to be, especially when we have a catalyst in front of us. As it pertains to our, let's see. So on a weekly, Simon Property Group is now at 24 SPG. Ford is now at 23. Gap is at 15. I think we're looking at monthlies on these, and we'll post this tomorrow. FXI is at 16. 16. Let's look at the dailies though. Where are they? Is that it? No, it's over here somewhere. Bear with me 1 second. Where are my dailies? So Philip Morris is a 17 red, no green, but Banco Bradesco is a 17 red and green. This is a Brazilian bank. So all that stuff I was just talking about in terms of these countries not being able to pay back their debt would greatly annihilate this company. So as you can see, boom. But where does it catch a bid, right? Like where does it rebound a little bit? If the market's going to fly higher this week, I would say that everything goes up. This one looks like a good one. This was going to be an 18, but it's not. All right, so Philip Morris and Banco Bradesco, both 17s. We'll update everyone on that tomorrow. But that is our commentary for the day. I believe I have some questions. So Nikki, I own Micron, and what I've always said is if you're willing to hold it, you're by definition willing to buy it. Because I can freely sell it right now, the owning of it is me saying I'd rather own it than cash. And the reason I said it like that is because it makes sense when it's explained. So by holding it is also me saying I would buy it. But I am selling it the latest Thursday morning. So this is a trade. This is my trade. So whatever you do, God bless. Ravi, what is your view on SPY calls into August, September timeframe? Any value? Of course. So I like SPY calls. I think that's a good idea. I think SPY right now, let's go back into share screen. Where did I'm losing my mind. And the answer is probably yes, because I probably am. So this is SPY right now. If we would take a look at levels, the natural level, see, from here to here happened in 2 days, right? From 406 to 389 happened in 2 days, which means if you get past 389, you're likely going to probably retest this 406 level. So my answer to that would be, I would go probably Spider 410 September. If I was really feeling sexy, I'd probably do 405's August. But there's no reason to go too crazy. But I would say that you make up these points quite quickly. So maybe 400 August or 410 September would be my estimation of that. And that is that. So everybody knows we do not have, so we finished our contract with Active Campaign, which means we don't have that mass email ability because we have Salesforce. Now, being that we're with Salesforce, we're waiting for everything to be complete before we start our emailing. The point of me saying that is please be on our live Wednesday so I can go ahead and update you on Rhino Street. We are really, really believing that this week will be the launch. This weekend, we want to do the pageantry of 4th of July. I just went ahead and completed our introductory letter that will be sent out to everyone. So there's a lot of good stuff happening. My team is finishing everything up. We were wishing for last weekend, but like I said, I think secretly we always hoped it to be next weekend. But everything's good. Like we're super excited. So I will not have any correspondence with you unless you're messaging me online, if you're in the groups, this or that, until Wednesday, 2 o'clock when we do our live. I love everyone and seriously, have the best day. Bye guys.